I don't think we're going to see 6,000 in the next month before we get into the kind of the year-end setup for the rally. But there is a potential here this month. We could see a bit of a pullback, potentially that 50-day moving average, which is currently sitting around 6,290, 6,300. So here's what you need to know before the bell this morning. On Friday, markets were closed on Monday, so no market didn't do anything yesterday. But on Friday, we closed down just a bit, still holding above the 20-day moving average. Again, bullishly speaking, this market's doing just fine. There's absolutely nothing to worry about here. A lot of the angst and media headlines, et cetera, have repeatedly not come to fruition. And so again, we just want to remain allocated right now. That 20-day moving average continues to act as running trend support right now. We haven't violated it to any degree. We had one day here over the last several months that we broke the 20-day moving average and immediately recovered back above it the next day, so it wasn't a validated break. But again, this market just keeps running that 20-day moving average as the trend line. So that trend line support is becoming fairly important because trading algorithms and systematic traders, et cetera, have all started to move their stops up to that 20-day moving average. So if we do get a confirmed violation of that 20-day, we could see a bit more selling pressure as those algorithmic programs kind of kick in and start selling kind of automated stops, getting set at that level. Just below that's a 50-day. Now, that 50-day moving average is going to be much more critical for support. If the market takes out that 50-day moving average, we're going to have a lot of programmatic selling kick in, and we're going to see potentially a quicker drop down here to the 100, 200-day moving average, which have all kind of converged right around 6,000. So again, that 6,000 is going to be extremely critical. I'm not saying we're going to get there at all. I don't think we're going to see 6,000 in the next month before we get into the kind of the year-end setup for the rally. But there is a potential here this month. We could see a bit of a pullback, potentially that 50-day moving average, which is currently sitting around 6,290, 6,300. One of the big kind of overriding concerns, we talked about this a bit on Friday, wrote about in the newsletter this weekend as well. So if you haven't read the Bull Bear report this weekend, went through a lot of this stuff and talked about the kind of the meme market that we're in right now. There's a bit of risk building on that side of the ledger. There's a lot of speculative activity that if we start to get a bit of a correction here, that speculative activity could unwind very quickly. And so that gives you that potential for that bit bigger drawdown this month, then potentially not. But we do have these negative divergences in both relative strength as well as momentum, and typically those precede a little bit bigger corrections than what you would normally expect. So there is at least a reason to be cautious with your allocations heading this month. Again, the markets are very bullish right now. There's no reason to be overly defensive in your portfolio, but because of these negative divergences and because of the seasonal time month of the year, because we've got corporate buybacks coming out, because we've got a lot of extensions in markets, a lot of speculative activity, it's worth just reviewing your portfolio allocation and just kind of rebalancing risk across the board. So again, a little bit of extra cash wouldn't hurt you this month. Again, we can get that if we do get a pullback in the markets, we can reallocate that cash to the markets for the end of the year rally. But again, there is some risk right now worth paying attention to. Anyway, that's what you need to know before the bell this morning.